So welcome to a capital hungry breakdown of GBPJPY. So before we get into the intraday GJ breakdown, which is really going to be a continuation of the previous breakdown, I really want to talk about some historical events, how history repeats, and some of the stuff we were talking about before we even recorded this, and just show proof of concept of different ideas on GJ specifically, starting from the higher time frames. Okay. And just talk about the story that has been painted here. So, for those of you who don't know, 2008 U.S. markets collapsed due to mortgage-backed securities being pretty much nothing, right? And this U.S. collapse led to a global market collapse, which of course ensued huge market fear and changed risk sentiment for the next few years, where risk currencies were basically dead, safe havens were flying, and yeah, the financial markets crashed. This led to an extreme weakness in risk currencies such as the British pound and one-sided volatility of strength in the yen. Okay, what that painted was this massive sell-off from a peak sell point, which we know from just basic trading concepts: sell high, buy low. Right? Price had these impulsive sells to create historical low point at around 120 flat, where you had this initial wick created. And then, as we know, the market moves in waves. For these sellers who were in, or any sellers in the stage that were in, to be relieved out of the market into profit, buyers jumped in from the lows, relieved some of their order flow, and this lower high point was created here, where you still see price react to make lower highs in areas of interest to this day. 10 years later, sorry, 10 years later, we're not in 2030 yet. But anyways, then because at that time, after having the economy collapse, we had weak economies for years. Millions of people had jobs lost around the world. And it was just a heavy fear sentiment that took years for economic rebound, right? Central banks had to cut rates around the world. And the same type of ideas we are seeing now with mass market fear in the headlines and in the sentiment, it was like that for years, okay? So what we saw is that in the overall, after the 2008 financial collapse, it took at least 3 to 4 years for some economic recovery after those lows were tested again in this bearish market structure, and you had this wick range get filled and 120 get tested. Then after signs of economic recovery, where technically that is shown as breaking bearish market structure, after respecting the low and buying low, then you had a rally, where that rally fundamentally is economies around the world rebounding post-economic collapse. Okay? What we want to note on GJ specifically, that the strength of this economic rally for the British pound was not enough to fully correct the downside move from the 2008 financial collapse, because we had another fundamental uncertainty come into the market to negatively impact GBP. For those who don't know, Brexit actually started in like 2016. There's actually been multiple Brexit attempts, even in like the 90s, but it formally started in 2016 when the initial vote happened. And I think it was June 2016. We saw, well, if you guys were trading, we saw the British pound fall almost 13% against the US dollar, specifically when you're looking at GU. And of course, GJ works the same way. So what did you have? Even when you're looking at it technically, you had this lower high point created now, and the upside corrective move was only 50 to 70% of the overall downside move, and it reacted to a previous area of price sensitivity historically as well. Okay? Of course, you can see this sort of cycle repeating in history. We're just talking about it here and what can come here with recent examples over the last 10, 15 years. But anyways, right? Then, extreme economic uncertainty for the British sterling, because you literally have potential economic infrastructure that's been set for decades of the UK being involved with the Euro Union, being a part of the Euro Union, and now they want to leave. This would mean major changes related to economic infrastructure with trade deals, everything along the lines down to small businesses would be impacted. Okay, this is when it first started. This led to the previous historical lows being tested again, and this repetition of history, where the sellers who jumped in the market from here, once we peaked that historical low point where we had previous price sensitivity, for them to get out of the market, you had a bit of a rally and corrective action point here that reacted and created another lower high. This bearish market structure right now, all I'm trying to identify is still very active, and we still have a lot of potential to fill this bearish wick here and come to these low points. To me, I don't see signs for long-term GJ upside unless we break this bearish market structure, because what's that break of bearish market structure signal to us on the higher time frames? Economic recovery stage. Okay? Now, besides having a 2008 financial collapse, that was primarily because of the mortgage-backed securities and everything from the ripple effect that started with what happened in the US markets, and it impacted banks and everything around the world. Now we still have Brexit tensions active. They just recently finally left the Euro Union fucking 4 years later, right? 3 to 4 years later, but they still have not solved any economic issues related to leaving the European Union, such as trade deals, because of what we have going on? Coronavirus. Coronavirus has also led to a massive market crash, and very similar to what happened in 2008. It's just we already had enough downside from Brexit tensions on GBP anyways, that we saw the US stock markets crash and the same economic impact of millions of jobs lost and jobs lost around the world, and economies being stagnant, that we are nowhere near an economic recovery stage yet, in my opinion. Right? So with all of that being said and understanding that, when we are looking at what's happening now, the potential to come test these lows, and let me delete a lot of the yellow lines and repeat what we are seeing historically. Here is a lot higher percentage chance. We are not at the point of breaking structure, having economies rebound, seeing strong optimism in economies opening back up. We don't have that yet. We do have higher potential of going into a lockdown round 2, coronavirus cases spreading, Brexit tensions still not fixed yet, and trade talks still not solved, right? Global trade war issues between the US and China, US and Europe. We do have the potential to visit these lows again, fill this seller's wick range, and then potentially have institutions and funds around the world, if we have signs of economic rebound, jump in from these lows to relieve the sellers. And then we would see a shift in economies rebounding when we have this secondary part of history repeat, where we actually have an economic recovery stage fundamentally, which in our recent time would be what? Coronavirus vaccine, no more lockdowns, economies opening back up, oil extremely bullish, gold deflating, global equity strong, right? People going back to work. That's fundamental economic recovery, which will lead to some type of correction to at least test another lower high point around, I say, the 150s, where that upside, even from a break of structure to the 150s, is 1,000 pips. This potential forecasted downside of what we are seeing repeat here is 1,000 pips. It's 130s down to the 120s, 119s. But understanding what's happening behind the scenes is a major key, right? So does everybody understand that before we get into our GJ breakdown and break down what's happening here now? Yeah. Okay, cool. So now let's just zoom in a bit more. GJ is still very bearish in market structure. Even when we're just looking at the monthly now zoomed in from 2015 forward, sellers impulsive candles, corrective upside. This was a low peaked and overall bearish market structure, right? You had price come below this area of sensitivity here, where you're seeing a strong support was being formed, and then price broke below it, is now using it as a resistance. We anticipated last month, after this low was peaked, that price would at least come to test better sell points as market optimism was very strong, but reject and stay below these sell point areas. With all of that just being said here, safe long-term buys to see some correction of this downside move, or even to test this higher time frame order block or price sensitivity area here, would mean we would need economic rebound and price above this key support level, or just key level, which would then be used as a support, and the bearish market structure, plus those signs of economic rebound I'm telling you we would need in the real world, right? Without that, as long as we remain below the 135s, the 137s, below this market structure, I still see us in higher time frame sells to get a repeat and visit these lows. Okay. We can see last month closed with a very solid rejection and coming below these candle bodies. I really just want to zoom into the time frames now and see where we could potentially peak to before we start seeing market fear and sells come in. One thing we want to notice is coronavirus cases are spreading, and we are seeing different central bank speakers, different politicians such as Bojo saying we will not hesitate to go back in imposing lockdown restrictions if need be, if we see major spikes. That's fine that they want to say that and bring this fear onto the scene, but it's not having any impact on global equities or the actual charts yet, or the actual currencies yet, right? Optimism is still very strong because that optimistic sentiment supports equities, supports corporations, supports smart money. But if we have an actual lockdown confirmed, and because a lockdown will lead to economies being stagnant and more jobs lost and the engine of the economy is being shut down, right? Then we can confirm that smart money might switch their liquidity flow and go back into the fear flow sentiment, and we can ride that wave down, which is 1,000 pips. On an intraday perspective, if we have that fear sentiment hold for the next month or two or whatever it may be, all you should be looking for is pullbacks, lower highs, and sells, which we'll talk about as well. And that's why I really want one-sided market volatility. So potential low target points we want to reach there. You can see this upside move that grabbed liquidity to better sell areas got fully corrected in the following 2 weeks. It looks like I still want what's very similar to our previous analysis, a peak of 135, 135.5 to create that weekly top wick, and as long as we remain below this bearish market structure, and then sells down to like the 125, 126s. Daily, we are seeing a hard support around this area as well with some of these candle body conjunctions. In previous lows failing to break. So I just want to mark that off and notice that safe sells would be below this point at 132.5. Would be easily safe sells to to this previous low point, and then so yeah, I think our analysis from last week still stands. We are getting some more intraday bullish structure, and I do see the potential for us to peak at 135.5, and those key sell areas I was showing you guys in the higher time frame, and then reject for possibly higher risk sells as we have market fear kick in. Safer sells would be below 133.5 and of course 132.5, because then that's when we're starting to heavily exhaust the buyers, and then 130.8 is when you are going to have a heavy meltdown. I'm just going to divide this range up and put a minor zone at the PPL 135. So there's wicks here as well. Intraday, we're still fairly bullish in market structure. You can see the bullish impulsive candles. The bearish candles are just 50% corrections in pullbacks, or very small liquidity being generated and exhausting sells, and then pullbacks for continued buys to the previous highs. Somebody have a question? No? All right. Yeah, so I think the analysis from last week still stands. Potential upside still to 135, 135.5, and then sells as market fear starts to creep in. Or the only way I see continued buys is a break up retest above 135.5 and market optimism, right? Because we need the law. We need these. I know the fear headlines from the coronavirus cases spiking are coming in, and they're coming in from around the world. But we need it to lead to a lockdown. And I know lockdown's gonna suck for all of us. That's why I got gym equipment. That's why I got a fucking weighted vest and a pull-up bar, just in case lockdown does happen. I'm getting ready. But there are positives to the lockdown too. You could save money. You know what I mean? You could save money instead of going out as much. Focus on more activities that to improve your life. Make more money in the markets with that fear sentiment. Joseph, it doesn't matter what I think. I want the lockdown to come just because of that one-sided fear sentiment and how we can ride those different trading instruments I told you guys, right? Like we can start selling Dow Jones, we can buy more gold spot, sell these yen pairs, sell the USD pairs, not USD primary, like XXX USD pairs. But yeah, if we break above 134.2 key level, where I see our continued upside to 135.5, and then I want to start selling this down. We'll just leave it like this for now. I only see continued buys above 135.5, 136, because that's our key level as well, and just this price sensitivity point, previous high. And this is an optimistic route based on market optimism. Just be careful at watching as potential reactions at this bullish TL from an intraday perspective. We only need lockdowns in Britain. Well, that's not a stupid question, but there wouldn't be only lockdowns in Britain. It's pretty much the whole globe follows suit, you know? Okay, so let me first see what you guys said. Okay. So Trump, new China virus cases up because of massive test. Yeah, I heard him say that. I heard him say shit like that. Trump trying to bring optimism. Yeah, Trump's trying to twist that the spike in cases in the US is not due to coronavirus actually being more dangerous. It's because their testing is so great that like the tests are Trump's fucking hilarious, man. He's so funny. Yeah, he's so funny, man. We only need lockdowns in Britain. Nope. We need lockdowns around the world, but there probably would be lockdowns around the world. When you say break above, what time frame are you looking at for better confirmation? So in this case of continued buys, or are you talking about here? If you're talking about here break above, I just need an hourly close and a retest, but especially like right now in this situation, I would need an hourly close above in a support formed or a retest on an intraday perspective. But if it's like the middle of the week, I'm more looking at lower time frame confirms as we've had price action possibly develop since then. But it's too early in the week to say anything now. But if you're talking about a continuation of what I mean above here, that's why I mark off like, hey, we need X, Y, Z, and those confirms a price above 136 to continue up. And that's why during the week, um, the new members probably haven't seen it yet. When we do these, and I'm going to do this week as too, I do these market update videos where instead of doing a full breakdown, the only thing we look at is the market structure on the lower time frame and potentially entry points on the lower time frame. What sequence of events you would need and price action for a higher probability trade following our analysis from the start of the week. I think people like those. So the market updates. No, I'm not analyzing the 4 hour. I just send you guys the 4 hour charts because it shows a lot more information from an intraday perspective. Like I can show more ranges just on the 4 hour chart, right? I personally, like I showed you guys in the webinars, I personally, when I'm watching candle closures from an intraday perspective, look at 1 hour candle closures alongside 1 minute price action. Because yes, a 1 hour can easily be a fake out on the 4 hour, but you can identify a fake out or break of structures easier on the 1 minute, right? You're going to know if something's a fake out or a clean break when you're looking at the 1 minute structure to notice, is it breaking structure lower time frame? Yeah, that's why. So that's why I use it hand in hand. I'll wait for like a candle closure above and then on the pullback, or when I'm just looking at the break and retest on the 1 minute, I'm just making sure the structure isn't breaking on the lower time frame. Because the lower time frame structure is pretty reliable when you zoom out. Because it's just zoomed in. It's just zoomed in of the intraday structure. Sometimes the intraday can be messy with the candles and you may not notice the structure. But remember when I show you guys a chart zoomed out on the 1 minute and you just see when GJ was bullish, that on the 1 minute it was just going boom, boom, boom. You know what I mean? It's beautiful. Where when people are just very narrowed in and focus on the last few hours or 4 hours, they might not notice that structure is still being held or still being respected or being broken finally. But I'm gonna. Oh wait. Before we say this and send it over, what do you got? Just UK construction PMI on Monday. No Japan news, and Bank of England Treasury Committee hearings also on Wednesday, which is tentative. So that means whenever they choose to do it, we just have to be aware of that. Nothing crazy as per planned political UK speakers, political or Bank of England speakers, but of course they can still pop up whenever they want. Just watch the headlines as well. Okay. So I'm gonna save this and send it over. I'm gonna eat dinner and stuff, and then we'll do Euro USD and UCAD breakdown. The Euro USD and UCAD ones are gonna be fairly quick. GJ was just a little bit longer because I wanted to do that dissection of the higher time frames, and so you guys understand what was happening behind the scenes during the actual, like what was actually impacting the economies at that time, painting that picture, and how interesting it is to see that like repeat. You know what I mean? LE, just because you said Dow breakdown, there's not going to be a Dow breakdown this week. So you fucked up for everybody. Everybody be mad at LE that there's no Dow breakdown this week. All right, guys, see you later.